Hey there, it's Endrit Sella, and welcome to Capital Markets Quickie. Let's dive into what happened in the markets yesterday. So, global stocks were holding steady near record highs as we kicked off the week. But, as we all know, September is historically a tricky month for the markets, so investors are starting to brace themselves. Over here in Europe, the Stoxx 600 index managed to recover most of its losses after hitting an all-time high last Friday. Volkswagen was up 1.3% after talking about some big factory closures in Germany. And in London, Rightmove shares jumped a whopping 27% thanks to takeover interest from Rupert Murdoch's REA Group. Meanwhile, here in the US, equity futures didn't show much movement, and with the Labor Day holiday, cash treasuries were closed. The dollar edged up a bit after having its worst month so far this year, and while Mexican stocks made some gains, Brazilian assets took a bit of a hit. Now, September has been a rough month for stocks over the last 4 years, and the infamous CBOE Volatility Index, or VIX, tends to rise each September. This year might not be any different, especially with the U.S. jobs report coming out this Friday. That report is going to be a big deal because it'll give us some clues on how quickly the Federal Reserve might start cutting rates, especially with the U.S. election campaign heating up. Right now, traders are betting that the Fed will begin easing rates this month, with about a 25% chance of a 50 basis point cut. One expert, Fiona Boll from S&P Dow Jones Indices, mentioned on Bloomberg that the market seems pretty set on some kind of rate cut happening. But she also pointed out that as we move further into autumn, the VIX might start reflecting more concerns about the markets and political issues. JP Morgan strategists are sounding a bit cautious, though. They're saying that even if the Fed cuts rates, it might not be enough to keep the rally going, especially since any easing would be in response to slowing growth. Plus, September's usual challenges aren't going anywhere. There's also talk that the markets might be too optimistic about a big rate cut in September. Valentin Marinov from Credit Agricole thinks the Fed might take a more cautious approach, which could help the dollar bounce back. Over in Asia, stocks were a bit down, mainly due to concerns about China's economy, where the ongoing property market slump is dragging on domestic demand. Hao Ong, the chief economist at Grow Investment Group, was pretty blunt, saying there's a huge problem in China and the government needs to step up its efforts. And in the commodities space, oil prices were all over the place as traders weighed a mix of factors, including a planned production increase from OPEC+, economic concerns in China, and lower output in Libya. That's your quick market wrap for today. Thanks for listening to Capital Markets Quickie. I'm Endrit Sella, and I'll catch you tomorrow with more updates.